Anderson. I'm with United Bank, and today's session is going to be on managing your credit. And this is an important step, we feel, to understanding the value of credit and having a good credit history. So today I'm going to talk a little bit about credit. I'm also going to talk a little bit about credit reports and why credit reports are important and what goes into a credit report, who will access a credit report and why. And then I'll talk a little bit about a credit score and how a credit score is calculated, and also what happens when somebody pulls a credit score on you. And then at the end, we'll talk a little bit about the importance of maintaining good credit. I thought to start, I would do a little pre-test. It's not a pop-up quiz. I'm going to tell you the answers to everything, but it sort of gives you a nice overview of everything we're going to talk about today. So the first question is, what is credit? Is it free money? Is it money you borrow? Is it the amount of money in your checking account, or is it the cash you save for emergency? The answer is credit is money you borrow. It has nothing to do with money in your checking account. It has nothing to do with money you've saved for emergency. Credit is what you borrow. Credit is like if you have a credit card and they've given you a line of credit for the credit card. That's what credit is. Which of the following describe why credit is important? Select all that apply. All of these apply. This is why credit is important. So you will have funds in case of an emergency. You can have a credit card. What happens if you have to go to the hospital in an emergency and you don't have any cash on you? It's good to have credit so you can at least pay for whatever services you have to have. So you can shop without carrying large amounts of cash. If you want to go buy clothes, you don't really want to buy, carry $500 or $600 worth of cash. You can pay for large purposes over time. Perfect example is if you want to buy a condo or a house. If you have credit, you can apply for a mortgage. You can pay for that purchase over 30 years or a longer period of time. So that's why it's important. And how you manage credit can help you maybe with a job. It can help maybe get insurance. It can help maybe get a lease for a car. This is important. Credit is important because people are going to ask what your credit is before you can do have a lot of these services. Credit reports. We're going to talk a little bit about credit reports later. What shows up on a credit report? Your income does not show up. Your race does not show up. Your checking account balance does not show up. What shows up on a credit report? Your credit, what you've borrowed, also any current or previous employers is going to be on your credit report. So no income, no checking account balances. It's going to be the credit you have and your current and previous employers. And I'm going to show you a sample credit report later on. Which of the following describes the purpose of a credit report and how it's used? This is a record of how you've paid your debt. It may help you get a job or an apartment or an insurance or lease a car. It may affect the amount you pay for security deposit for a house. It may help you get a loan. This is why credit is important. All of this is important. Now, which of the following is not included in the public information record section of your credit report? So in your credit report, you're going to have a public information section. And this public information section is going to report any tax liens, any bankruptcy, any foreclosures, any judgment. All of that is public information that will show up on your credit report. Which of the following are ways to prevent identity theft? And we touched a little bit on this on the first session. You need to protect your financial information. Protect your Social Security number, your credit cards, protect your mail, shred your account numbers, keep your financial information clean. Don't throw away statements because there are a lot of people who go through trash to pick up this information. So it's important to protect your personal information to prevent identity theft. Now, which is not a way to build credit history? I think I have a little pointer here. Oh, here. Okay, not a way to build credit history. Obtain a small loan or get a cosigner for a loan, get credit at a local store, borrow the credit card of somebody else with credit, or pay bills on time. So if you borrow someone else's credit card, nothing is going to show up on your credit report, nothing. So that you're not building any credit history by borrowing somebody else's credit. So that's not a good way to build your credit. And which of these is true about repairing your credit history? It takes years to repair your credit history. So on your credit report, if the information is accurate, you cannot remove it. We talked a little bit about earlier, if it's wrong, you can go back to the credit agency with information and you can say, this is inaccurate. You can do that. But if it's right, it's not going to be removed. You can create a new identity. You don't want to create a new identity. That's theft, so don't do that. You don't want to use somebody else's social security number or somebody else's credit history. You cannot, that's theft, and that is, could be criminal action. And you will not have to pay your bills. So that's not true. You can't repay your credit history by not repaying your bills. But I can tell you it just takes years to correct your credit history. So credit, we got back to what is credit earlier. It's when you borrow money. That is credit. So maybe some of you have gone to a bank to ask to borrow a small amount of money. Credit card, where you get a credit line, you're borrowing money. If you get a store card, if you go to Macy's, you get a Macy's card, that's borrowing money. Anytime you can borrow money and pay it back over a period of time, that's called credit. So you can borrow money and get a loan. And typically when you do this, if you get a loan, you have to pay interest, and this is the amount of money that the financial institution charges you for getting its money back. So if you borrow money, you're going to have to pay a little bit of interest. As you pay it back, you're going to have to pay interest until you pay it back. But credit can be useful. You just have to be careful the way you use credit. It's important for a number of reasons. You can use credit for emergencies. I mentioned that before. What if you have an unexpected expense? My example, a tree fell on our yard. I didn't have money to pay to have the tree removed, but I had a credit card. And so I was able to get the tree removed by using my credit card and paying it off of a period of time. Luckily, it didn't fall on the house, but it just sort of like blocked the whole front of the yard. And they were going to charge me a lot of money to remove it. And the only way I could do it is pay it on a credit card. So sometimes a credit is more convenient than carrying large amounts of cash. You want to buy school supplies, you want to buy clothes. You may not want to carry $500 in your wallet. I don't like to do that, so I use a credit card. The other reason it's important is prospective employers or landlords, insurance companies, they want to know how you're using credit. We'll get into this in a minute, but prospective employers, they get your permission, but they'll pull a credit report on you. They want to know how you're using credit. How are you handling your finances? They will want to look at the credit report to see if there's anything in there that they should be aware of. But if you use credit right, your credit report is going to be satisfactory, and it may help you get an apartment or get a home or be able to lease a car. So it's important to keep your credit clean. Now sometimes a credit is secured by collateral. I talked a little bit about this before. Condo, home, perfect example. The bank or the lending group is going to take your home as collateral. You can spread the payment out over a long period of time, but they're going to want to have that collateral to support the loan. Or sometimes if somebody can guarantee the facility, they're not a co-signer, but they guarantee, sometimes that helps secure a loan if you have somebody who's willing to guarantee the loan for you. So credit's used, again, borrowing money, we talked about this, insurance coverage, Insurers will often check to see, you check your credit to see whether or not they can cover you. Employment, often employers, again, they get your permission, but they'll ask if they can pull a credit report so they can see what is in the credit report to make sure everything is satisfactory. Utilities, sometimes you can't get hooked up until Pepco or Washington Gas wants to see a credit report to make sure you can pay back that utility on a monthly basis. And renting, it's important because landlords are going to ask to see if they can pull your report to see how your history is to, before they lease you that apartment, they're going to want to see your report. So it's important to maintain good credit. And again, what do they pull? It's a credit report. So what does a credit report show? A credit report is a record of how you've paid your debts, but it also tells lenders who you are, how much debt you have, whether you've made those payments on time, whether there's any negative information on your public records. So it's going to have your name, and it's going to have your address, current and previous address. It's going to list all of your credit cards or your mortgages or your loans, what you've been paying and how much balance is left on those loans. It's going to say, have there been any late payments? And the negative information on public events, which I'll mention in just a second. So here again, your credit report. It's going to have your name, your Social Security number, your current and previous address, your telephone number, your date of birth, your current and previous employers, and your spouse's name if married. Now, this is your credit report. It is your own report. It doesn't include a spouse. So just, it'll have a name, but this is your own record. It's not combined with anybody else. It's in your name alone. It's an individual credit report. It's going to show your credit history. It's going to have an account of all your different creditors. It's going to show, again, how much credit you have, how much has been extended, what's outstanding, how you've paid it back. That is very important. So you always want to make sure you pay your credit back on the time that you have to pay that credit back. You want to make those payments in a timely manner. It's also going to contain a list of inquiries. So if you apply for a credit card, and this credit card company is going to pull a credit report, whether or not you get the credit card, it's going to have a list of the inquiries on your credit report. If you apply for a mortgage, the mortgage company is going to pull a credit report. So it's going to have a list of the mortgage company that you've applied for. If you want to buy a car, the auto dealership pulls a credit report. It's going to show up on your credit report. The good news is when you're looking for a mortgage or you're looking for a car, those inquiries only stay there for 30 days. However, if you're looking for credit cards, and if somebody pulls a credit report on you and they see a whole list of credit cards that you've applied for, that may raise some questions. They may ask you, what did you do? It's only with those types of credit inquiries. If it's for a mortgage company or a car, they're going to know you were shopping around for a rate, and that they typically withdraw those after 30 days. But you just may get some questions if you have a lot of credit card inquiries on your report. The credit report is also going to have public records. So on this section of the credit report, your public records are going to be shown. Have any amounts gone into collection? Have you had any bankruptcies? Have you had any foreclosures? Have you had any tax liens, civil judgments, delinquent student payments? All of this is going to show up on your public records, and these are there for a long period of time. So bankruptcy, foreclosure, tax liens, these take years to get off. So this, if you have bankruptcy, it's at a last resort because it takes years to get bankruptcies off. Any collection accounts. So if any accounts have been sent to a collector, if you have any medical bills or utility bills that have gone for collection, those are going to show up. So just as a repeat, people who are going to pull your reports, prospective employers, credit card companies, insurers, rental. It's going to contain information about your bill payment history, your loans, your current debt, financial information. Your credit report's going to show where you work, where you live, whether you've been sued, arrested, filed for bankruptcy. And all of this information is available on that credit report. So as these organizations start pulling these reports, they're going to start gathering all this information on you. And I'm going to talk a little bit about, and we touched on this in the earlier section, how important it is to pull your report on an annual basis to make sure this information is accurate. So here we go. You're entitled to a free credit report once a year from all these agencies that I'm going to talk about. This particular agency is annualcreditreport.com. This is the agency that's recommended by the Federal Deposit Insurance Corporation, FDIC, annualcreditreport.com. And I have a little table up on the third floor, and I have this printed out. But you can go onto the web and you can get their information. But you can ask for a free credit report once a year from annualcreditreport.com. You can also write them and ask for a free credit report if you want to write and just request it, and they would send it to you. You could just write this email address. They'll probably ask you for your name, address, social security. They want to identify you, obviously, because they're not going to give it out to just anybody. So they're going to ask you some questions about your name and your address to make sure to identify you over the phone or the website. You can also get free credit reports. We mentioned this: Equifax, Experian, TransUnion. So you can get a free credit report once a year from each one of these organizations. So really, you can get 4 free credit reports every year.
So if you're going through the annual credit report, do you specify which agency you want your report from, or they send you all 3?
No. Annual credit report is going to send you a credit report, and it's going to contain the same information.
Well, they do something
you have different scores, but it's the same information. So I'll get into scoring later. They all use different models for scoring.
Okay.
But when you see the sample credit report, you're going to see all the information that's on that credit report. But if you want to correct information on your report, you have to go to the agency that you pulled the report from to correct information.
So they're only going to send you one. It would just be from a random agency.
No. You can call Equif. You can go. This annual is their own.
It's their own.
It's their own.
Okay.
Equifax, Experian, and TransUnion is their own too.
So there's
But
really 4.
yeah, there's 4. So you could pull one credit report a quarter if you wanted to. I mean, I'm not sure you want to, but it's the same information. However, if you corrected information on one agency, if you wrote them and you sent them documentation and you said this is wrong, it may not show up immediately on the others. So you need to write them and say, you have to correct this report.
Okay.
It doesn't, these guys are pulling the timing is everything. So they're pulling the data all the time. But if you correct one, you got to correct all of them because they're probably showed up on all of them. So if you find errors, you want to correct them immediately, as soon as you can. You're going to have to show them evidence, but you can correct it.
And then that question, you were talking about the different people that may pull your report for different reasons.
Yeah.
How long does the credit report that other people have access to go back?
So
is
no.
it from the beginning when you first establish your credit, like people are seeing your entire credit history?
The report is not that long. I'll show you. It is actually, because if you apply for a credit card today, or you applied for a credit card 5 years ago, but it's still outstanding, it's still going to be on your credit report. It's going to show your balance, and it's going to show your activity.
Right.
Is that what you're referring to?
Well,
And public
The active
records.
accounts, right? Not just the active accounts, but say you had a car that you paid off 10 years ago. Does it show that information? I mean, is everything that you've ever had available to anyone who wants to look at your credit report?
If you've paid that off and it's been satisfactory, it's going to clear on your report. It's not going to show up on your report. If you didn't pay it off and you went into collection, that would show on your report.
Okay.
If you have a credit card and you've paid it off, you need to contact that credit card company, cancel it. Because it would show up on the report as still outstanding until you've officially canceled that credit card. But if you've done everything appropriately, that means your credit history has been satisfactory and it is going to go off. Only the bad credit history is going to show.
And then
Yeah,
active.
yeah.
And then also, I mean, I see why, I guess from some perspective, why employers want to look at your credit history.
Yes.
But it seems like that's giving them access to a lot of personal information that might not even truly be necessary for you to be able to do the responsibilities of your job.
But it's your credit history. It doesn't include your income. It doesn't include a lot of information. It's just your credit history. If they're looking to see how are you
Employment
paid.
history.
Previous and current employer.
And how long does that go back?
It's previous and current, so
Oh,
it's only, that's it, two.
Okay, okay.
So it doesn't go back that. But it doesn't have your income. It doesn't have any tax returns. Doesn't show any. They may ask for that information. I'll mention a personal story in a minute. They may ask if you're looking to rent property. They may ask to see your pay stubs
Right.
to figure out what you're making. But it's not. That's not going to show up on your credit. Only how you're handling your credit is going to show up.
Right, okay. Only the bad stuff that you've done on your credit is gonna show up.
If it's bad, it's going to
Right.
show up. Yeah, I'm
Okay.
sorry. Did I answer? No?
And I have one more, if you don't mind,
Yeah.
before we move on. So you were saying like all these different people will be pulling your report. So say you're in the market to get a car loan.
Right.
Would it be better for you to get a copy of your credit report instead of having multiple inquiries being put on where you could just present it to the
Sure.
dealerships that you're going to?
They're going to pull it anyway, but you could.
Oh, okay.
You could ask for a free one, yes. You could, if you wanted to do that. You'd be proactive so you would sort of know what it is and what's out there.
Because I've heard that inquiries actually hurt your credit.
Not pulling up, not if you pull it. Inquiries from credit card companies, if you go to 5 different credit card companies and you ask for 5 different cards, it's just going to raise a question. Somebody's going to say, why are you trying to get a MasterCard and a Visa, an American Express? And that may raise a question.
Okay.
That's all.
And then those only stay for 30 days.
No, the only ones that is if you're looking for a home loan or an auto loan. Inquiries can stay a little bit longer. There's some space limitations, but they'll see that there are a lot of inquiries that they'll just ask a question: Why are you looking for all of these loans?
Okay.
And you can usually answer those questions.
There's
Yeah.
no like set amount of time that inquiries expire if I'm looking for a mortgage after 60 days, 90 days.
A mortgage will they'll take it off because they know you're looking. They'll see you're looking for. They understand you're shopping around for a mortgage. They'll take that off after 30 days.
Okay.
And a car, they'll take it off.
Okay.
Because people shop around and they want rates, so yeah. But it's the credit card companies that sometimes raise the red flag and they'll ask questions about why were you doing that. And it's also good for you to know, what if somebody's out there using your identity, applying for credit cards? So it's good for you to check to make sure there's nobody out there using your information to see. And then if that's the case, you can write the agency and say, I didn't do these inquiries. I didn't apply for these cards. We need to take that information off. Yeah. So it's good for you to see if there's somebody else out there trying to use your information.
Thank you.
Any other questions?
I have one.
Yeah.
Because I notice, because I work in the automobile industry,
Mhm.
and sometimes people get annoyed, like if they're trying to purchase a car and house at the same time, that they really get concerned about the number of inquiries that's put on their report. It kind of conflicts.
Mhm.
Could you elaborate on that?
Well, what I've been told is that if you're looking for a home or looking for a car, people understand you do multiple checks. And they stay on there for 30 days, but then they go off. People understand you're shopping around. It's the credit card company, the credit card inquiries, that it raises the red flag, and they'll ask the question about that. But everybody understands you're looking for rates, or you might go to multiple mortgage companies, or you might go to multiple car dealers, and everybody pulls it up. And I've been told that people understand, and then they know they're going to drop
They
off
said
after
it
30
drops
days.
Their point.
Yeah, I don't think it drops that much. But I'll mention that they're all these different little ranges. I don't think it's going to drop it that much. And it's a dealership should understand if somebody's looking for a rate. Now, I just want to mention this. If you pull a credit report, or if you contact one of these agencies and you're denied, they may just not have enough information on you. So you have to contact them directly and ask for the report and why did they deny you. You're calling the credit agency for a report to check. And if they deny you, they just may need more information. So I mentioned in the earlier session, I have, my children are young adults now. So my son lives downtown. He wanted to buy a condo. He hardly ever goes to a bank. I don't think he would know what a bank lobby looks like. But he wanted this condo. They couldn't find a report on him. He's never borrowed money. He does everything on his phone. He has a checking account. He had an apartment where he would write his monthly check, but he never had a credit card. He never bought a car. He lives downtown. He has no credit history whatsoever. They couldn't find a report. It wasn't bad. It wasn't negative. He just didn't have a report. So he had to go to the mortgage company. He had to show them like 2 years of paying his rent. He had to show them his pay statement. He had to provide them with a lot of information. He did get the loan, but he just didn't have any credit. So I suggested to him, you got the mortgage now, you got the condo, why don't you apply for a small MasterCard? So you need to build up your credit. So he never had done anything like that. So it may not be negative, they may just not have enough information on you when you acquire about your own credit report. But it would be good to check for that. Yeah.
When you close a credit card account,
Yes.
does it give a negative impact on your credit?
No.
Or it doesn't?
No. If you've paid off your balance and you closed it off, absolutely not.
Okay. Then the second question I have, like when the credit card, they give you offers like no interest
Right.
for maybe 18 months.
Right.
If you take out majority of the money, is that like a good thing or a bad thing?
It's not a bad thing, because you have to make your decision. Do you really need all that money? Because they're going to charge you interest, and you're going to have to pay it back. But it's not a bad thing. What the credit report is going to tell them is how much outstanding debt you have. So you don't want to build up a whole lot of debt that you're not using, or if you really need it, it's not a bad thing to do that. But the credit report is then going to say, this person is paying it back on a monthly basis, they're paying the bills on time, everything is satisfactory. Does that help? When you close out your credit card, don't just cut the card up. You need to contact that card company, say, I've canceled my card, so that they close it out. Yeah, otherwise they'll still have you outstanding then, even if you clip your card or whatever. So you want to make sure you cancel it, calling them up saying, I no longer want this card. So credit reports, mentioned this earlier. They don't contain your checking or your savings account balances. They don't have your income. They don't have your medical history. They don't contain any purchases made with cash or check. No business account information. Does not include your race, gender, religion, national origin, or your driver record.
What about bills that you pay on a monthly basis that you're not borrowing money for, like utility bills, car insurance?
No, it is not. Well, no, it is not going to show up that.
Okay.
It would show up if you don't pay your utility bill and they put it in collection, then that's negative.
Okay.
That is going to go into your negative information section.
Right.
Yeah, but other than that, you're right. It's not going to show up.
Positive things you do don't show, but
Yes.
they only the
Well, it shows indirectly in that, yeah, indirectly because they know you're paying it on time. So they're going to understand that. Yeah. So it's negative if it goes into a tax lien or a judgment or bankruptcy. So here, I wanted to mention, negative information in your public records can show up for up to 7 years. That's why it takes a long time to repair your history. Bankruptcies can be on the report for up to 10 years and unpaid tax liens for 15 years. It takes a long time. You can always talk about this with your lender if you want to, but that's going to show up. It takes a long time to repair your history. You can always file a complaint if you're not satisfied with the report or they haven't taken something off. Consumer Financial Protection Bureau. Errors, as I mentioned, you can write a letter to the agency that you pulled the report from, show them documentation of why it should be corrected and why it's an error. Now, if you could pull a report once a year from each one of those agencies, but if you're denied credit, you have the right to go back to that agency again and ask for a report if you're denied credit. So you can do that if there's a situation, and that way you can review your report, make sure you correct any information. But you can get another free report if that happens. Here's a copy of the credit report, just a sample copy, just so you all can see a little bit. As I said, you can always pull your, so here's your address of the agency that you got the report from. Here's your current address, your social security, your date of birth, your telephone number, employment information, data reported. So this is the date that they pulled it, job description, etc. Here's your public records. So here you're going to find, did I have a tax lien? Did I have bankruptcy? Did I have a judgment? Anything sent for collection? This is your public record information that's going to show up here. Here's your collection. If anything was sent to a collection agency, what's going on? And here is where it's going to have your credit account information. So these are going to be your department store credits, your bank credit, your auto credit, your mortgage. This is going to show up. So it's going to have here, I can't quite read it, but part of the account number, and it's going to show the maximum credit. I'm sorry, this is date opened. I can't quite read it. But anyway, it's going to have the max credit, what you're paying, if you're paying on time, if you have any delinquencies, it's all going to show up in this part of the report.
One of them says high credit. What is that?
So that's like if you've got a credit card, your high credit was $5,000 and your balance is $2,500. So they know that's your high credit. That's the maximum amount you can borrow. And here, previous payment history, 3 times 30 days late, so it's going to show up here. And here's this inquiry section, the clicker, but anyway, the inquiry section is who's pulling these reports. And it's going to show Equifax pulled one, you got a bank card, you got a department store, and it would show if auto pulled or mortgage company pulled, so that information is going to be there. So credit scores. So all of these agencies use credit scores. And unfortunately, they all use different models. They all they're the same, but they're different models that they use out there. But they take this information from your credit report and they score it. So a credit score is a number that rates your credit risk at any one point in time. So timing is different. Unfortunately, it is when they pull that account. Scoring model uses information from your credit report to create a credit score. So it helps creditors determine to give you credit, decide terms. If you have a high score, you might get lower interest. And how you would assess to pay them back. So some lenders want to use just a credit score. Some lenders they'll use credit score, they'll use income, they use other information, but sometimes they use just a credit score. So it's important to know what your credit score is. High score, it's easier to get credit, get a loan. So the information that goes in a credit score, the credit score is going to take into consideration your bill paying history, your unpaid debt, the type of accounts that you have, your credit history, all your applications. This is where it may affect you, but it's not significant. The types of credit accounts you have, and whether any money has been sent to a debt collector or foreclosure or you've been sued. So the higher the score makes it easier for you to qualify for a loan. So most credit scores range between 300 and 850. 850 is a very, very high score. I don't think I've ever seen that. But you'd be walking on water if you got 850. 300 is the lowest. So you can experience different credit scores. So here's some examples of credit scores. And this is why they vary a little bit. But they're all kind of in the same range. They're all good. So credit card company can pull one score and it comes up at 726. A credit monitoring service can pull a score, it comes up at 698. Auto dealer pulls a score, it comes up at 711. They're using these different scoring models. They're all in the same range, but just to give you an idea, they vary. It's not to be concerned about. If your information is accurate on your report, they're going to vary slightly, but it's all going to be in the same range. These credit reporting scores use this data that is reported to them by the credit card companies, by the reports, the credit agencies. As I mentioned, timing can be a factor. When do they pull this information? This information, your credit records are constantly in motion, so it depends on when they pull this data and how the score is calculated. And the other is the scoring model. I mentioned they use this FICO, they use Advantage, they use these different models. Depending on the model, you can get a little different score. Credit history, spending behavior form the basis of your credit score. Credit history, payment history, unpaid debt, length, percentage of credit used, the type of debt, and any new applications go into your credit score. So here's your credit score. 35% is your payment history. If you pay your bills on time, this is going to be satisfactory. 30% on the amount that you owe. This is your outstanding debt. You always want to make sure your outstanding debt is only about 33 to 35% of your annual income, your gross income. So you always need to be careful. The lower the debt can help you improve your score. Your length of history. How long have you been paying off your debt? How long have you had debt? That can help your score. Types of credit. Having different types of credit like mortgage or car. You're having a variety can help your score. They don't want to see it all in just credit card debt. They want to see a variety of debt. And 10% is new credit. As I said, it's going to raise a red flag. It's not going to be significant, but you want to be careful about how many times you've had credit card inquiries and how is that going to affect your score. So as I mentioned before, your excellent score is in the 800 range. Your very good score is in the 700s. Good score, your fair score is in the 600, 650 to 699. So anything below 650 is in a lower category. It doesn't mean you're not going to get the debt, but they may ask some more questions about how are you paying your debt on time and how are you handling your credit. So how do I establish good credit? You want to get in the habit of repaying your bills, repaying them on time. This would be the basis for a good report and for a good score. You want to open a checking or savings account. The balance isn't going to show on your credit report, but it's good to have a checking or savings account with a financial institution. If you want to have good credit and you don't have any credit, you might want to apply for a small credit card or you want to get some credit so that you can start having a credit report that can then translate into a score for you. So you want to negotiate, you can make down payments on purchases, negotiate credit payments, and you want to keep your debt level low. You just want to make sure it's manageable. As I mentioned before, all your monthly obligations, your rent, mortgage, car payment, school, should be less or equal to 30 to 35% of your monthly gross income. It's not a hard rule, but you just want to make sure that they want to make sure you can comfortably pay your debt, because you have a lot of other things to do with your monthly income. You've got food, you've got clothes, you've got to take care of yourself. These fixed payments, rent, mortgage, car payment, school loans, they just want to make sure that you can do it comfortably so that you can then have funds in your gross income for other things that you're going to need on a monthly basis.
Taking your minimum payment amount?
Yeah, that's all. They want to make sure you can comfortably cover it. Once you get the credit, just make sure you manage it. I mentioned this before. If you find yourself in a bind, you probably don't want to go to the internet to find a company that says they can pay off your debt for $5,000. Just go back to the lender, say, I need a plan here. I need to work on figuring out, do I need to restructure my mortgage payment? Do I need to restructure my credit card debt? Work with your lenders on a payment plan and find a solution, and they will do that. They will help you out. They will make sure that they work with you to find a solution so that you can create the budget and also comfortably repay that debt. So, 5 minutes left. It's a lot of information. 3 minutes, sorry. How about some questions? Anybody have any questions?
I know you said when you have negative things take a while to come off of your credit report. Besides paying your bills on time and trying to maintain a low debt-to-income ratio, what are some things that you can do to try to raise your score in the meantime?
Well, some of the things would be like open up a checking account. They're going to give you a debit card. So if you do that effectively and you manage your credit card balances, that's going to help out. But if you're paying your bills on time and everything, it's all going to translate into a good score. Yeah.
Sometimes having keeping an account that was paid off, like a credit card, for instance, that you paid off, keeping that open help to reduce your. You
don't want too many accounts open, but yeah, you could have one or two that you want, because it's good to have credit for emergencies. So it's good to have a couple of credit cards. You just don't want to have too many out there that, so if they pull a credit report and they see that you've got $15,000 in available credit, that they might ask questions about that. That's all.
Some people say that if you pay off a credit card, close the account, as you did say, or some people say leave that account at a zero balance because it looks better that you have this available credit.
If you want that, yeah. Just not too many of them.
Right, okay.
That's all. Yeah, that's I think. Yeah.
What about home loans or school loans? How are they placed on your credit report?
So that is part of your credit history. So as you're paying those back, that's going to be that's your credit history.
Are different things weighed heavily as others? Because if you're going, I see that they go by like that. I always heard of an income to debt ratio. No, they don't necessarily go by your income. But like this young lady just mentioned,
right.
With the credit card, if you keep it open, the balance, it looks good because you have a higher, of money that you have the ability to borrow but have not borrowed yet.
Right.
So how does the income to debt ratio, how does a home loan or having a home loan impact the ability to get other loans?
Right.
Or having
So that's what they're going to do. They're going to look at that income to debt. So if you've got a mortgage loan and you've got school loans, your monthly payments are going to factor into that income to debt ratio that you mentioned. So they like to see 30 to 35% as a comfortable ratio for that debt to income. So, I mean, it's not a hard ratio, but they could, maybe if you're paying everything back on time, they may say, okay, maybe 50%. But they know you're going to have other monthly expenses with your income. They just want to make sure that you're comfortable in paying back all that debt. But it's going to be factored into that debt ratio that you have on a monthly basis. Your student loan, what the minimum payment you're supposed to make on your student loan, and your mortgage, and everything else that you have. So thank you very much.